Hi, I'm Debbie, and I'm with TMG the Mortgage Group. Canadian owned and operated since 1990. Our national team of mortgage brokers and associates have helped hundreds of thousands of Canadians just like you with their financing needs. Our mortgage brokers and associates provide independent and objective advice on mortgage solutions based on your unique situation. We also offer mortgage renewal expertise. And so the purpose of today's video is to talk about what you can expect when your mortgage comes up for renewal. First and foremost, a word of caution. Banks routinely charge higher interest rates to existing clients than they do new ones. In fact, many Canadian homeowners simply sign renewal agreements with their current banks without researching other mortgage options and rates. It's an expensive mistake that banks count on, and it's costing homeowners thousands of dollars and years of unnecessary payments on their mortgage. Fact: your current lender will wait until there are approximately 30 days before renewing to contact you and make a renewal offer. That same lender will likely give a brand new client 90 to 120 days consideration on holding a rate. There are two reasons for this. Number one, banks know that by leaving it to the last minute, chances are you will renew your mortgage with them and not at the best rates. If they were to give you a lot of notice, you might have the time to shop around, which increases the odds of you leaving or forcing them to give you a better rate. Number two, your current lender will not guarantee an interest rate more than 1 month before renewal. If you were to call them 4 months before renewing and ask about rates, they would most likely quote you their advertised rates. Once you finally do get in touch with your lender, you will naturally ask them if they can offer something lower or perhaps a product you heard or read about that they have yet to even offer you. They might quote an additional discount, but the response is usually going to be, if you find a better rate, call us and we'll match it, which leaves you to do all the work with no risk on their side. You would think that as an existing customer, banks should offer you their best rate without having to negotiate. Actually, shouldn't they offer you the same deal they're going to give a brand new customer coming to them for the very first time? Sadly, that's not how it works. But there is better news. Canadian mortgage statistics show that it works to your advantage to plan on moving your mortgage to another lender. But it doesn't have to be difficult or a time-consuming process. That's where TMG comes in. Based on a research report by the Bank of Canada, Canadians that plan ahead and work with a mortgage broker or associate save an average of 19 basis points on their mortgages. By having a mortgage broker or associate do the research and negotiating on their behalf, those Canadians achieved an average rate decrease of 1.4% off the posted rate compared with just 1% among other renewers doing the legwork on their own. By acting in your best interests, we can lock in a rate with various lenders for a no-cost mortgage transfer as much as 4 months in advance for your renewal date. If the rates go up, you don't have to worry. Your rate is guaranteed. If the rates go down, you receive the lower rate. Here's what your current lender will likely offer if you call them 4 months before your renewal. They will offer to renew your mortgage early at the rate they have quoted you. However, by doing this, you lose any opportunity to renew the mortgage at a lower rate if one becomes available during the period leading up to your natural renewal. In some cases, they may even quote you a penalty to have the privilege of renewing your mortgage early. You can say this approach means you can have your cake, but you can't eat it too. Compare that to TMG's strategy that locks in a competitive rate 4 months before your renewal. If rates go up, you're protected. If rates come down, you benefit. Our approach is more like you can have your cake and you can eat it. And if a better piece of cake comes along, you can eat that one as well. It's also our job to review key mortgage features with you like terms and prepayment options. And who knows, in the end, we may advise you to stay right where you are, but it's worth finding out whether or not you can financially benefit from switching lenders. And like I said, statistics show that's usually the case. The best part, all this flexibility, all this research, all this time and money you save, and in the majority of cases, our mortgage brokers and associates are paid by the lending institution you decide to renew with, so there's no additional cost to you. At TMG, we call it our no-sweat mortgage. From new home purchases and renewals to investment homes and equity financing for home renovation, our mortgage brokers will do all the legwork, number crunching, and negotiating on your behalf, delivering solutions that make the most sense for you. In other words, we'll sweat the details so you don't have to. For more on how we can help with your upcoming renewal, visit mortgagegroup.com to locate a mortgage broker or associate in your area. At the very least, I encourage you to plan ahead and take advantage of the strategies that are available to you to ensure you can get the very best mortgage solution at the time of your renewal. Thanks for watching.